Welcome to the world of options. These financial instruments might sound complex, but don't sweat it. We're going to break it down nice and easy. Options are like coupons for the financial markets. They give you the right, but not the obligation, to buy or sell an asset at a specific price by a specific date. Think of it as having a rain check for your favorite stock or commodity. These bad boys are called derivatives because their value is derived from an underlying asset. That asset could be a stock, a bond, an index like the S&P 500, or even something like gold or oil. Now, let's say you have an option to buy 100 shares of Apple stock at $150 per share. If the market price of Apple soars to $175, you're laughing. You can exercise your option, buy those shares at the lower price, and sell them for a profit. Sweet deal, right? Before we continue, if you like this video, please remember to share it with your friends, hit the like button, subscribe to the channel, and then watch some more of our videos. Options come in two main flavors, calls and puts. Think of them as the Batman and Robin of the financial world, each with their own superpowers. A call option is your ticket to potential profits if you think the price of an asset is going up. It gives you the right to buy the asset at a certain price, the strike price, by a certain date, the expiration date. Bullish on Tesla? Buy a call option. On the other hand, a put option is your friend when you're feeling bearish. It gives you the right to sell an asset at the strike price by the expiration date. Worried about a market dip? A put option can act like a safety net. Remember, options are all about flexibility. You're not obligated to exercise them. If the market moves against you, you can simply let the option expire. No harm, no foul, just a small price you pay for the potential for big gains. Now here's where things get really interesting. You can either buy options or sell them. It's like being on both sides of a trade, each with its own risk and reward profile. Buying an option is like placing a bet on a horse race. You pay a premium for the chance to win big if the market moves in your favor. But if your bet is wrong, you only lose the premium you paid. Limited risk, unlimited profit potential sounds good, right? Selling an option is a bit like being the casino. You collect the premium up front, but you take on the obligation to buy or sell the asset if the option buyer decides to exercise their right. It's a strategy for more experienced traders who are comfortable with potentially unlimited risk. Whether you're a buyer or a seller, remember that options trading is a zero-sum game. One trader's profit is another trader's loss. So do your homework, manage your risk, and trade responsibly. Options aren't just for thrill-seeking speculators. They can be powerful tools for managing risk and protecting your portfolio. That's right, folks. Options can be boring too. Let's say you own shares of a company you love, but you're worried about a potential market downturn. You could buy put options on those shares as a form of insurance. If the stock price drops, your put options will increase in value, offsetting some of your losses. Think of it like buying insurance for your car. You hope you never have to use it, but it gives you peace of mind knowing you're protected if something unexpected happens. Hedging with options can be a smart strategy for investors who want to participate in the market's upside potential while limiting their downside risk. It's all about finding the right balance between risk and reward. Now let's talk about the exciting part, speculation. Options can be used to make leveraged bets on the direction of an asset's price. And when I say leveraged, I mean you can potentially make or lose a lot of money with a relatively small investment. Imagine you're convinced that a certain tech stock is about to skyrocket. You could buy call options on that stock, and if your prediction is right, you could see massive gains. Of course, if the stock tanks, you'll lose your premium. But hey, that's the name of the game. Options trading for speculation is not for the faint of heart. It's crucial to have a solid understanding of the markets, a well-defined trading plan, and a healthy appetite for risk. Always remember, folks, never invest more than you can afford to lose. Section 6. The allure of options, flexibility and potential. Options offer a level of flexibility and potential that's hard to beat. Whether you're a seasoned trader or just starting out, there's an option strategy out there for you. Want to bet on a big price swing but not sure which way the market will go? Consider a straddle or a strangle. Looking to generate income from your existing portfolio? Covered calls and cash-secured puts might be your new best friends. The possibilities with options are endless. But remember, with great power comes great responsibility. It's essential to educate yourself on the risks involved and to trade with discipline and a clear head. Section 7. Understanding option pricing, a world of variables. Now, let's talk about option pricing. It's not as simple as looking at the price of the underlying asset. Several factors influence an option's premium, and understanding these variables is key to making informed trading decisions. First, we have the intrinsic value, which is the difference between the strike price and the current market price of the underlying asset. Then, there's the time value, which reflects the amount of time left until the option expires. Other factors that come into play include volatility, interest rates, and even dividends. It's a lot to take in, but trust me, understanding these factors is crucial to making smart options trades. Section 8. Risks and rewards. Navigating the options landscape. Options trading can be a wild ride, folks. The potential for high returns is there, but so is the risk of significant losses. It's crucial to understand the risks involved before jumping into the options trading arena. One of the biggest risks is the time decay of options. As an option gets closer to its expiration date, its time value decreases. This means that if the underlying asset's price doesn't move in your favor quickly enough, you could lose your entire investment. Another risk is the potential for unlimited losses when selling options. If the market moves sharply against you, your losses could exceed your initial investment. It's important to remember that options trading is not for everyone. It requires a certain level of risk tolerance, financial knowledge, and emotional discipline. But for those who are willing to put in the work, options can be a powerful tool for achieving their financial goals. Section 9. Options trading. A world of possibilities awaits. So, there you have it, folks. Options may seem complicated at first, but once you grasp the basics, they can open up a world of possibilities for managing risk, speculating on market movements, and potentially boosting your investment returns. Remember, knowledge is power. Take the time to learn about different options strategies, understand the risks involved, and start trading with small amounts of capital until you're comfortable with the process. And hey, if you ever need some trading advice, you know where to find me. Just remember, I'm not responsible for any losses you might incur. Happy trading! If you liked this video, please share it with your friends, hit the like button, subscribe to the channel, and watch more of our great videos. Disclaimer: I am not a financial advisor. I do not provide investment, tax, legal, or accounting advice. This material has been prepared for entertainment purposes only, and is not intended to provide, and should not be relied on for investment, tax, legal, or accounting advice. You should consult your own tax, legal, and accounting advisors before engaging in any transaction. Thanks for watching.